Hi there. Thank you for viewing this week's video. Let's take a look at the indices and check out how they have performed and also the outlook for the upcoming week. First, let's do a quick discussion on the market performance last week. The US market began the week with a muted display as it struggled to move higher, especially after Powell's speech. Although the core PCE data was slightly down, which helped the market to rise up momentarily on Tuesday night, but Powell's comment led to a heavy sell-off thereafter. The concern is, of course, the growth because of the higher interest rate. The heavy sell-off has pushed the index below its important support level that I had mentioned last week, and that also ensured that the US indices had the worst first half of the year's performance since 1970. The selling continued into Wednesday and Thursday, but the indices made a good comeback on Friday to go into the 4th of July holiday celebration on a white candle. Overall, the market is down for the week. We will look at the performance charts later. But before that, let's take a look at the Asian market. The STI continued to struggle at its resistance at 3151 with an attempt to break up from the resistance. Hang Seng had a relatively good week, even though it ended lower on the last 2 days of trading for the week before the anniversary celebrations with President Xi. Now, let's take a look at the performance chart on the screen here. Get the screen out over here. Okay, so you are looking at the performance chart on the screen with reference to 24th of June, last Friday's performance. We are looking at Hang Seng up about 0.6%. The STI down around 0.5%, while the Dow was down about 1.3, S&P 500 down about 2.2. Then the worst performing index is Nasdaq again, and it was down about 4.1%. Okay, so let's take a look at the technical aspect, starting with the US market. From the technical chart, there is a glimmer of hope. So let's go through one by one. So technically, we are looking at the Dow having a white candle confirmation at the end of the week for the doji pattern formed on Tuesday night. So what is the significance of this doji pattern? Usually doji pattern like this can help to form a new support. And of course, it cannot guarantee the magnitude of the rebound. Some rebound strongly, some just a short rebound. So we got to see how far the rebound going to be next week. Seems like this is a sign of more upward movement. And most importantly, if you observe here, Dow closed above the important support at 31,014 points, and thus suggests a potential good rebound next week. So the immediate resistance is at 31,895 right now. Okay, so if the upward movement can bring it to this resistance, it will be a positive sign. But if it cannot reach there, or on Tuesday when it opened, it actually goes lower, back below 31,000 points. Of course, the support to watch is around here, 29,623. Okay, so later on, I'll be sharing what are the signs that may be helping the index to move higher next week. But of course, these are just a sign, but we need confirmation on Tuesday night. Now, S&P 500 has also a white candle confirmation for its doji pattern. And thus, this is a good sign. However, Tesla, component of S&P 500, has just announced its latest car deliveries on Saturday night, or Saturday rather, and it was down 17.9% as compared to earlier from the previous announcement. So the deliveries was down due to the COVID disruption in China. So it may impact the index, though unknown how big the impact is. The positive aspect of the announcement is that the analysts were expecting 250,000 cars delivered, while Tesla delivered 254,000, a tad higher than the expectation. So if this is a positive impact, it can help the index to recover and go past 3836, and the level that we are looking at, the next level of resistance that we're looking at is 39,000, or rather, I beg your pardon, 3,945. Now, if the rebound fails to take off, we are looking at the key support at 3,640. So let's see whether the market see this as a positive news, because going forward, I think Tesla can recover because China is in fact, Shanghai has resumed back its most of its normal life, and I think the factory is functioning right now. Now, let's go to Nasdaq. Over here, we are looking at Friday's close, not as good as Dow and S&P 500, but still provides a glimmer of hope for next week. Now, the index may also be impacted by Tesla. So the performance on Tuesday night is relatively important, as if it's able to push back above 11,247 points, it may continue higher and then push to 11,705 resistance. Now, of course, if you were to look at some of the drawings that I have made last week, in fact, on the Nasdaq composite, it did not rebound back to its resistance or to its high. So therefore, a little bit disappointing, but then still we got to look forward. So the market may be able to do so next week. Hopefully we can have a good week ahead. Now, overall, there are some positive signs to take note. Hopefully these positive signs maintain into the next week. And let's take a look over here. We have first, we have the lower bond yield. Okay, so the bond yield is lower right now. As you look at the screen that I'm going to share. So let me try to share the screen right now. Okay, so just bear with me. So we are looking at the screen with 2 years bond yield, which is 2.8%. And the 10-year bond yield is 2.889%. So this is below the 3%. So this is a good sign. So if you look at the technical chart over here, in fact, we are looking at potential more downward movement. If the bond yield hit below 2.8, goes to 2.74 and below, it may be a bearish sign for the bond yield, which is good for the stock market. So a lower bond yield can help the stock market to rally. Then the next thing is the gasoline price over here. The gasoline price has been going down. Now it's to 4.822. So it has been on a downtrend for the whole week. So hopefully this component continue to trend lower so that the stock market has a good chance to recover. Now back to the stock chart over here, we are going to look at the Asian market. Here we have the STI up next. So STI struggled. You can see there's 1 day of attempt to break up from its resistance. Let's plot the resistance line again. So we can see the resistance line around 3151. We attempt to break up with this upper shadow, but it failed. Then there was a heavy sell-off thereafter, pushing the index back towards its support level, minor support level at around 3089. So the next support level will be at around 3070. Now the worrying sign is that the three big component of the index is actually facing downward pressure. Like let's look at OCBC and DBS over here on the screen. We can see OCBC has broken its support level with a descending triangle pattern, and the projection level for the lower action is 1095 level, which coincidentally is its key support level over here, the major support level. DBS projection level is around 2870. This is around its key support level over here as well. So you can see from this point, about 29, 22 to 28, 24, these are the support zone for the bank. And of course, UOB doesn't look very good as well, as it continue to trend lower. So these big three components may pull the index lower, and so we got to watch how the STI will perform next week. Now moving to Hang Seng. Hang Seng overall did well as it managed to keep its uptrend intact. However, the last 2 days of trading was kind of like disappointing, as it created bearish sign on the weekly chart. So if you look at the weekly chart over here, it is a weekly shooting star at this resistance level. This is not a positive sign. If it led to a sell-off to this support level over here, which is around 21,300 to 21,400, hopefully it can rebound at the daily chart and retest this resistance level at 22,444. If it close at that level next week, it may negate this shooting star and we may possibly see more upside, especially when you break up from this resistance. And of course, a very optimistic projection is to 26,707. Of course, this is just a projection, so you may not hit there. Now, wrapping up, we are looking at the market over here with a positive sign going ahead. So we got to really look at how the market will perform, and then we have to see what is ahead of us. So the new earnings season is going to start. In fact, the official earnings season will start on the 2nd week of July. And then we are looking at next week of short week trading with service PMI and ISM non-manufacturing data on Wednesday night. Then the market will be also looking at non-farm payroll at the end of the week for some direction. So for the Hong Kong market, the market will be looking at China CPI data. Now, along the way next week, I think some of the Fed member will be speaking as well. So the market may be taking cues from their speech, especially when there are signs that the rate hike may not be more aggressive. In fact, they may be slowing the rate hike. Then the market can take some breather and continue to go up higher. So thank you for viewing this week video. And I'll see you next week.